hanging man on the 5-minute time frame. But mind you, I told you guys, I don't know if I've told you guys this. Smaller time frames, they make a lot of noise. They are just temporarily, so they don't actually decide a full direction where the market is heading. But sometimes, I mean, most of the time and most often, the market will always turn and change itself in a smaller time frame before getting the move in a bigger picture. So that could be a potential breakdown. Okay, this price is coming down here to take all this, right? That could be it, that the price is coming down here to take all this. But you see that 5-minute hasn't been broken yet, but 1-minute already did broke structure. 1-minute already did broke below this box that we just, these lines that we just put up there for you. So until the bigger time frame is broken, this stays valid, this stays positive. All right, let's find you a shooting star. Let's find you a shooting star. Well, you could probably say this was a shooting star. Maybe not, there was no trend here. No, you can't say this was a shooting star. It was definitely in the middle of a trend. But let's find a shooting star for you. All right, clearly right here, that was at the top of a trend. That's your shooting star, right? The body is smaller and the high is at twice the size of the body. And it closed around the low, indicating that this uptrend is exhausted, right? Was that even an uptrend? Yes, this was an uptrend all the way from down here. So this was an uptrend, and that was your high. Is indicating at the high that, okay, this trend is exhausting. And mind you, you actually saw it push the price to a different direction, triggering this and all this. Forget about this price being up here. To me, this is just a whole big range because this price didn't actually last up here for a minute. So yes, that's your hanging man. And let's actually find another one. There you go. There you go. That's another one. That's another one. I don't know what time frame printed this, but this is still in the uptrend. This still at the top of this trend. All right, so this still at the top of this trend. But let's see if we have a bigger picture that actually printed where. Let's go to M15. Well, again, like I said, you can argue that that's a hammer. That's a shooting star right there. So yes, guys, again, like I said, I'm just showing you guys these patterns. I'm just showing you guys these patterns that you're going to be using probably when you start trading. Okay, look at what I was telling you guys. Maybe the 15-minute give a more clear vision. So this is actually the first drive, the second drive, probably the third drive is forming. But on 5 minutes, it did already form its own 3 drives right there. So ideally, this price shouldn't come below here because the price form on smaller time frame before changing into a bigger picture. And let me tell you guys something. You will hear me most of the time call some of this stuff. You see, it's called, what is this? This hanging man, right? But you hear me most of the time call them a breaker, even a hammer, a breaker, depending where the price is. Say this price roll back above here, right? This price roll back up here. I will say that is a breaker. That's a breaker break because the price, first of all, first time price break below here, below all this action here, it tried to break below here and it didn't happen, and then it faked out to the upside and then finally broke below it. So where this my box is, where my box is actually a little bit higher. So you won't be surprised if this price managed to get up here first. It will reject maybe right here from around this zone. I won't be surprised, but ideally, I don't know what time frame I was using. Ideally, it comes up here. All right. So I mean, nothing is always certain until it is developed, until it's for sure. But as traders, you always take everything at your advantage. Okay, guys, before I let you guys ask some questions, uh, let's show you guys on how to use this chart a little bit before you ask some questions, because I'm sure last time we tried to do that, we didn't have the full time to go all on that. So this is your trading view. Mind you, I told you guys trading view is the most important tool you want to have as a trader. So this is trading view, and you want to make sure that every time you come on trading view, let's just go and search it back. Say that says tradingview.com. Let's delete this. Let's just go back. All right. So you come to your browser, type tradingview.com, and it pops up. First thing you need to do is, this is why this one is good more than any other exchange, because it search everything. Come on the search bar, search whatever you want to search that you want to trade. If you choose whether you want to trade crypto, Forex, futures, for any of this stuff, since we are trading crypto, this by default is always on crypto. Let's just search a pair. Let's just search a pair. Let's just search a random coin. Which coin have I not touched for so long? Let's say, uh, oh gosh, just scroll. Oh, okay, I saw somebody, I don't know if they were trying to ask for XRP and a Telegram. Let's just say XRP. All right, now this is one crucial stuff that you should do when you search. Mind you, it's going to pop up here. The first thing that will come up here will be the market cap.
I'm learning a new skill.
Please mute yourself.
Online stuff.
The first thing that you see here is the market cap, meaning like the total amount of the company, the total amount of that currency, the total valuation of that currency. So if you click on this chart, it will take you just to the market cap, which sometimes also important to see what you're actually trading, to see how much is what. But most of the time, if you just type XRP or type just the coin name, it will come up here. Most of the time, it will show you the highest exchange that is trading it. And most of the time, you see Coinbase is the highest one. Are you using Coinbase to trade? No. If not, don't click on that chart, because the value, the numbers and the decimals and all those stuff is very important. Sometimes you can identify something in a chart and then make a mistake. If you're trading on Binance, okay, click on XRP Binance coin. But sometimes you want to make sure that if you're trading perpetuals, like if you're trading with borrow money on futures, you have to make sure that it's perpetual or swap XRP or futures before you click on it. If it's a spot, sometimes the spot XRP, the numbers, the decimals are different from the futures, like this, like the perpetual contract is different from this spot one. Not totally different, but it's a little bit just different. The way the numbers, exact number, let's click on it and show you the difference. All right, let's say this is a spot. Let's put our line here. Where did that price go to? Price came down there, right? That's the lowest point. That was 2.8483. Let's go back and do maybe the peps. Okay, That is the peps. All right, let's sometime that just few dollars different, just few decimal different. All right. So yes, there you go. Are we on the right? There you go. So the other one was 2.8383 something. I know it's not the same number. This one is 2.8468. So when you're trading with borrow money, you want to make sure that you are using the perpetual chart. You're not using just the normal chart. You're using the future chart, not the spot chart. So that if you want to put your stop, say you put your risk reward and say you want to long, so you want to long right there. Let's take this, let's just drop this somewhere and stop exactly at that point. All right, you'll be able to read the exact number, but the spot wouldn't give you that. The spot would have given you a little bit early, 83, and maybe you get stop out why this hasn't triggered yet. But anyways, most of the time, if it comes there, it probably going to hit the spot anyway. So yes, that is just the first thing that you should know when you come to TradingView. You search whatever you want to search. Okay, let's get a new XRP chart. Oh yes, let's just click on the peps. Or let's just click on somewhere on Bybit. If you're trading with Bybit, let's see if they have wicks because that's what I'm using, and probably a lot of you should use that as well if you want. I don't have any business with them. I just feel like they're good. They don't need any verification. Just scroll down until you see your own exchange. Uh, let's try to see probability. All right, let's search again. XRP USDT. Spot Fiji. Oh, no.
Okunda,
XRP US.
Okunda, Okunda.
Oh, do we have wicks? Okay, right there. Oh, that's wicks for you, but that is spot. Let's see. We have peps.
Nature. Nature. And you know empire.
Please identify that person that is talking and text them to stop talking. I'm sharing my screen. I can't see who is talking. So, all right. I think that, yeah, that's your peps contract. You click on that. All right. Click on that. Now that is looking juicy. All right. So yes, when you open a chart, when you click whatever you search, the first thing that you do, again, remember I told you guys to identify area of support and resistance. Area of support meaning being the level that the price stop going, level that the price stop going down, and an area of supply or resistance being an area where price stop going up. So say this is your zone, right? Say this is your small zone that you're trading. This is your small zone that you're interested in because this you're measuring from here to here. Say since price visited this area, it came up here and now it's trading here. So this is your zone. So the first thing you do is you identify these two areas. I love to use just simple lines. Is there is no beautification, there is no profit in making your chart looking all sweet, all nice and charming. That won't pay you money if you don't know what you're doing. So yes, you identify your two zones. All right. So we assuming that this is the area of support, right? Meaning that we are hoping price don't get below it. Price should stop falling when it comes around it. As you see, it did a lot of dancing around here, and it's trading around resistance as well. I mean that price has been struggling to push through this area. Let's put 5 minutes. 5 minutes will actually give us a lot of candles to work with. Yes. All right. So 5 minute. Let's actually get it close. All right. Yeah, that is your 5 minute since this last candle. From here to here, this has been past 5 minutes, a lot of 5 minutes. Uh, Probably a lot to count right now. But yes, you see that price is trading within one of these area. You want to map them and see what is going on, see what happened below here and see what happened above here. So if price managed to get above one of this area, right? Meaning the buyers has suppressed the seller, meaning the price is strong, the price is going bullish, you're going long. But don't just trade that because you want to, that alone is not giving you a trade setup. A lot of stuff combined again, like I said. But when you see a chart, probably let's actually map that because that will actually give you a clear direction. So yes, seem like that has been the most interested point. So yes, you want to watch and see what price does on this one of this area first. Boom, or up here. So if you get up here first, probably mean that this area has been broken out. Means that price has broken structure. Price has broken a high that it formed before. But if you get below here, yes, price has broken structure as well, but you still have this low to be taken. That is just a reminder for you because sometimes you can just do like this, then fake out, but it still stay above here. Price is still bullish. It's just gearing up more. It's just gathering. It's just like you reinforcing. It's just gathering some more energy to come and break up this area. So sometimes you see your area, the first thing you do, you map. Again, like I said, this is not something that I'll probably say I'll be teaching you how to use because I myself don't know what I'll be doing with this stuff. Just play around with this stuff. Whatever works for you, use it. If you just want to insert a text, you click on this, it will show you. If you want to put a text on the screen, you just type whatever you want to type. If you want to put emojis, how you're feeling, you just put that, whatever you want. Okay, now one other thing that I use a lot, it's a rectangle. Most of the time using lines and using lines and the point of interest is often awful because it doesn't map. You're supposed to be mapping an area. Say, okay, since we are trading down here, right? Where is our point of interest? What are we interested in? We probably interested for price to see if price come up here, what will price do? Right? If price come all the way up here, we take out this high. So when you take out a box, you put your box regarding to what push the price. Remember from the last class, I told you guys when price move is highly determined on a lot of different stuff. And mostly if you're trading smart money contracts, highly depends on order blocks, fair value gaps, and breakout breaks. And again, I told you guys that I define what the fair value gap is. I define what a order block was. I define what a breakout break was. Again, like I said, a breakout break, is a candle that fails to push price to a certain direction, and then when price finally pass that area, that candle becomes a breakout break. That particular candle becomes a breakout break. Okay, what can we say our breakout break was in this zone, right? Let's just extend this box. Sometimes people will be like, why is your box too big? Okay, say price was trading up here first. Price traded up here for some time, right? And then what happened? Maybe it tried to push down here and it didn't go, did not break. What was that candle? What was that candle? This was your candle. That was it. Try to push it down, even though this is not a real valid breaker. I'll show you guys on some real example, maybe in a different chart. Yes, this was a candle that failed to push down, and that's where it started. And then again, what did I tell you guys that the other block was? Other block is that candle that happened before the next candle that caused price to move to an opposite direction. So in this case, we will call this green candle up here an order block. We'll call this an order block. But if price was up here, this becomes a breaker break because you see that it tried to push price, it didn't go. But this is an order block, and this is another order block because this was the last candle before the red candle that caused all this action to come down here. Technically, why I'm saying this is the order block because price spent a little bit more of time here before generating this green candle that happened before the red candle that caused all this downward move. So most often price revisit those areas, those type of areas before continuing to the same to the opposite direction. Okay, let's just say ignore this other breaker break that I was saying this was your break. Let's make our box even bigger. Say this was your break, right? You're putting the zone knowing that, okay, the actual invalidation is up here. You fail up here. If you're shorting, if you want to be a bear and the price is trading inside here, you fail above here. But you start trying to short around here. You start trying to short around here. The first try, you get stop out here. That is okay. Losses are part of the game. Second try, you get stop out here. But the moment you should stop shorting is when price actually take out this last order block. If price visit that area, that is the point of interest. And ideally, again, on a normal picture, the price is in a downtrend, right? Price in a downtrend will always be normal since this price from here to here make a low here, if this is the low, and then it's only normal for a lower high to form around here or around here. If you put, I don't like using this trend line, but trend lines are just psychological